With all the news about what made it in and out of the Fiscal Responsibility Act over the weekend, there's also a lot of talk around the IRS keeping most of its new funding. What does this mean for you? This week on Life Planning 101, we're going to hit the refresh button on our publication we did in January entitled 87,000 New IRS Agents, 10 Things You Need to Know. Please enjoy. Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Welcome to Life Planning 101. My name is Angela Robinson with Smart Money Group and Kennedy Financial Services here in the big town of Eastland, Texas. And we're going to be talking about 87,000 new IRS agents, 10 things you need to know. Now, anytime we ever talk about taxes, I like to start off on just a little bit of note of humor. So I want to tell you about this nervous taxpayer that was unhappily conversing with this IRS auditor when they were reviewing the records, of course. And at one point, the auditor said, well, we feel it is a great privilege to be allowed to live and work in this grand country called the USA. And as a citizen, you have an obligation to pay your dues, your taxes, and we expect you to pay them with a smile. The taxpayer looked at him, said, "Oh, thank God. I thought you were going to want cash." If only we could pay them with a smile, right? But yes, we are Americans and we do have dues to live in this great country, and it is called taxes. There is no doubt about that. And so what I want to do before we just dive in to some of the meat in the topics of these 10 things you need to know, I want to address the political views on this thing. There's a lot of hair on this, and really, it doesn't matter if you are red, blue, green, yellow, whatever your political vibe is. The truth is the truth, and so I think it's really important to put this to rest because we're all Americans. We're all facing the same thing, which is called paying our taxes. And if we don't do it right, we're all facing potential issues behind that, right? So let's talk about this quote unquote, 87,000 new IRS agents, okay? So the truth is this. The IRS is set to receive approximately $80 billion in increased funding. And the goal with that was so that they could close this gap and increase their revenue in the estimates about $203 billion. So that's a pretty good return on their money. And, as soon as this came out, the claim by the GOP is that this is going to usher in a quote unquote army of 87,000 new IRS agents. Well, the truth behind this is that there is not a set agenda to hire 87,000 agents. This number is it's a real number. It's just an estimate that the Treasury Department gave to maintain the IRS efficiency as it is. The interesting thing is, if you talk to almost any tax professional out there that prepares returns and actually communicates with the IRS, they're going to tell you, man, it's a mess. The IRS is behind. They're defunct of good communication, and any assistance is just not happening. In addition to that, they are performing less audits than ever before. I think they got really behind back in 2020, and they've just never caught up. And so, nonetheless, we can say that they're not going to hire 87,000 IRS agents. Truth is, we don't know what they're going to do. But we can't ignore this fact, okay? $45.6 billion of that $80 billion of funding is dedicated and designated to go towards enforcement. So the bottom line is this: no matter what your political beliefs are, you better have your T's crossed and your I's dotted, okay? So that's number 10. Number 9 is the truth, part 2. Okay, the House voted to actually repeal, and you're probably getting the news about it right now as we speak. You're probably seeing stuff about this. The House actually voted to repeal $72 billion of this increased funding on January 7th of this year. Okay, we got a new House. It's a GOP House, and that was their promise as they came into office. McCarthy was going to back this thing out, and that's exactly what they've done. They've lived up to that promise. They passed right along party lines. But the reality that this is going to happen is slim to none, Because remember, for anything to get done in Washington, for a legislation actually to go into law, it means that it has to pass the House, it has to pass the Senate, and it has to be signed by the president. Well, 2/3 of that is the parties that voted for this bill in the first place, okay? The other thing that's on the table, and this is very interesting, the Freedom Caucus actually just put together a proposal, and McCarthy says, we're going to vote on this. And it's to abolish the IRS completely and substitute that with a quote-unquote fair tax, okay? Now, what that actually looks like is more like a consumption tax, a sales tax, right? But this is really completely out of question because, again, for anything to get passed, you know what has to happen. So, yes, you still need to buckle up and be ready for this thing. Number 8, who's at risk here? 87,000 agents or half that many or whatever it is that we don't know. Who's actually at risk? Who needs to be watching all their P's and Q's through this thing? Well, that may be the $1 million question. Literally, in some cases. If you think you are safe because you are cash poor, land rich, lots of farmers and ranchers can equate to that, you may want to think again. Interestingly enough, low income earners that took that earned income tax credit were audited 5.5 times more than everyone else in 2022. Yes. And if you want the statistics and the information on this, make sure you go to our website, by the way, www.kennedy-financial.com. Sign up for our weekly newsletter. This is in there this week. It's on our website. 87,000 new IRS agents, 10 things you need to know. Really good information for you and to be passing along to anyone that you really, care about. So nonetheless, the thing is that I wouldn't put my chips on if that's going to stay the same or if it's going to change. I don't know what's going to happen. I do know that there is a lot of political scrutiny around the area to close with what's called $600 billion tax gap. And that's the difference in what people owe than what they're actually paying. So I know there's a lot of PPP money that's been pushed out there. There's the ERC credit. A lot of that's to do with that. But who knows who that target market is that they're actually going after. The Democrats have made it very clear that they don't want to tackle anyone less than $400,000 a year, but they're already, 5.5 times more auditing low income earners. So I don't know that the IRS and politics actually talk. I don't think they do. I think it's more of whatever they think they can do to get the money, right? So you have that. And then you also have this looming 2026 estate tax exemption cliff. Remember, everything gets slashed in half. And doesn't that happen to line up perfectly with the onboarding of all these agents and training them? So who is at risk? Buckle up. Everybody should be crossing their T's, dotting their I's. Number 7, employee retention credit. So there wasn't much political attention around an announcement that was made last fall that the IRS had actually already trained at least 300 employees to do employee retention credit audits. And many farmers and ranchers and even business owners have not qualified for these, but they've been convinced by these companies that are helping people that they should qualify. And I just want people to know that the IRS is dead serious about this, and they've said it. We're going to be aggressive about this. If you did this wrong, we're coming after you. And the businesses that are doing this wrong, they're coming after them from legal perspectives. So if you don't know what you don't know in this area, you need to get a trusted advisor, get a second opinion. Even if you've already had it done, you need to take a look at this. And there's still time on that employer retention credit. So if you haven't touched it, it's definitely something to talk to your tax advisor about, because I don't want people to be scared. If you're actually legitimately eligible to get that money, you need to do that for your business. But if you're not, or if you don't know if you're not, you need to know if you're not. That's a pretty big deal. And they've said it straight out that this is what they're going after. So we've covered the first 4 of the 10 things that you need to know with 87,000 new IRS agents coming on board. When we come back, the remaining 6 right here on Life Planning 101. Welcome back to Life Planning 101. My name is Angela Robinson with Smart Money Group and Kennedy Financial Services here in the great town of Eastland, Texas. Do you want to know the difference between death and taxes? Well, the difference is that Congress doesn't meet every year to make death worse. Is so true. I literally thought I was going to get by without having to read any piece of legislation at the end of the year. It's kind of my Christmas routine now. And no, we had to pass something and make things more complicated, which, by the way, if you missed the show last week where we covered required minimum distributions from your IRA, make sure you go back and listen to that on our podcast, www.kennedy-financial.com. And we're going to have much more good to come out of Secure 2.0 through Life Planning 101 this season. So you're not going to want to miss that either. But we've been talking about the top 10 things you need to know with this $80 billion of increased funding that the IRS has in their hands. We talked about, politics. We talked about myth versus truth in the first section. And the bottom line is you need to buckle up. We talked about the employee retention credit. If you missed that, make sure you go back and listen. But let's talk about 1099s, issuing 1099s, okay? So if you don't issue a 1099, if you've paid someone over $600 cumulatively, not just at a time, but cumulatively throughout a year, then you don't get a deduction, period. Now, if you paid a company that is incorporated, you do get a deduction. But even that, and figuring that out can be very confusing because they could use the words that they are incorporated and they are not incorporated. That means partnerships, any pass-through entities, you have to issue a 1099. Otherwise, there is not a deduction. And I see a lot of accountants coming down really hard on this. They're saying, hey, if you didn't issue the 1099, we're not taking it because if the IRS comes and audits, it's out. It's out. There's no question about it. That's a big surprise. Here we are in January. I highly recommend you go back through your books, make sure you've got everybody issued that you need to get issued, and do that because those are due this month. It's really important. And here's just a quick tip is going forward, just keep a W-9 on your phone. Send that to anyone before you actually pay them. It's a good way to make sure you get it back, right? So there's number 6. Number 5, receive receipt. I think in the farm and ranch world especially, it's really interesting. We make trades, we do things with a handshake. It's just the good old boy way, right? But this isn't very audit proof. So you should be aware that you do need proper documentation really on everything you do. And if you don't know how to get that proper documentation, you need to be talking with your accountant to make sure you're doing it correctly. But if you're buying anything new, used from your neighbor, get a receipt. If you're trading something, get a receipt and make sure that it's got the name of the person, the date of the transaction, the description of the goods, the purchase price, and how it was paid. Cash, credit card, check, Venmo. You're hearing that a lot here lately. You need to have these things in order so that if you get an audit, you do have those T's crossed and those I's dotted. Number 4. Well, we talked about Congress making things worse every time they meet. So let's just hope that they don't make things worse before 2026. But do you know we have that looming cliff with estate taxes in 2026 where these hefty exemption amounts that we have right now, I think it's like around $12.9 million per person that you can pass on in 2023 without paying estate taxes. All that gets slashed in half. Why is this important? Well, especially for landowners, okay? Your wealth is probably your land and your crops and your livestock, and it's not cash, right? And if you don't do the proper planning, this could really get your goat. But the cool thing is that you have time. You've still got 3 years that you could actually use because it's not just an estate tax exemption, it's a gift exemption too. So you can utilize some of these tools. You could put strings on them. You don't have to make anything permanent just to get your plans put in place and make sure that you are taking care of, what is most important to you about passing on your ranch, your farm, your business to that next generation, if that's important to you. I mean, I have had people say, I don't care, they can figure it out. And it is a train wreck, but most families are focused on, we want good Christmases and Thanksgivings. That's what's most important to us. And unfortunately, the almighty dollar ends up interfering with that all too often. So, the other thing to think about, and I don't know if they did this on purpose, it's very rarely you see Congress make a good business decision, right? So it's probably by accident. But it just happens that, if you remember, you can go back and audit 3 years. Well, we are 3 years out from that 2026 date right now. You can go back even further than that. And by the way, people need to know that if you've been making errors, that gives them cause that they could potentially go back further. 6 years is pretty easy to get to for the IRS. And then they could even go back even further in some cases. So it means you better get your gift tax returns in order. Your estate planning needs to be ironclad. We actually have been working with an attorney and offering a service that We will have him on the show here later in the year that he is actually doing estate audits, internal estate audits, to make sure everything is tied up with a little bow, because that's so important in these day and time, especially if we're going to have an increase in audits. And that seems to me, if they're looking to close that gap, that's a pretty big area to focus on, and they would be crazy not to do it. So I think it's really important, and people are just kicking that can and not getting their planning done, and they're going to run out of time. So better this year than ever, because again, that 3-year rule is ticking. Don't try to push this up against 2026. And especially because the fact that if you do that, you could end up with not even finding a good attorney. The great ones will definitely be already in play, but the good ones, that will be hard to find. So you don't know what you're getting at that point. So do this early. Do not wait. It's too big. Now, when we come back on Life Planning 101, we have the last 10 things you need to know about 87,000 new IRS agents, quote unquote. Going back to the first segment of the show, it's really just an $80 billion increase in funding, but it doesn't mean that you don't have an increased risk of an audit. That is totally not true. So be crossing your T's, dotting your I's, and you're not going to want to miss the rest of Life Planning 101. Welcome back to Life Planning 101. My name is Angela Robinson with Smart Money Group, Kennedy Financial Services here in the great town of Eastland, Texas. And we are talking about an increase of $80 billion in funding to the IRS and what that means for you, the 10 things you need to know. If you have missed any of the show, I highly recommend you go back and listen to it. And we are going to get to the bottom 3 on our list. Did you know that a fine is a tax for doing wrong, and a tax is a fine for doing well, right? Well, confusion won't win an audit. Here's the reality. Albert Einstein stated the hardest thing in the world to understand is income tax. I would totally agree. I mean, the U.S. tax code is unbelievably complicated, and it's getting more so all of the time. December was the last time we saw this happen, right? Well, I don't know. They got legislation thrown out there right now. So my bet is that even Einstein had a good tax professional. So, if you're a business owner, you need to have a tax professional. And you need to have a good one. You need to have a right fit one. Sometimes I think a lot of times people make a mistake that they've had the same guy that they've used for 20, 30 years. It's the guy that started them out. And they're very faithful, very loyal, but maybe they've outgrown that professional in the last 10 or 20 years. And you have to ask yourself, have I outgrown who I'm working with? Do I need to have someone that can help me in different ways? Are they keeping up with the tax code the way that I need them to be to help me keep as much money in my pocket as I can, but also keep clean, make sure I'm doing the right things? And then even in some cases, you need a team. You need someone to help you proactively plan and help you strategize. A lot of accountants, not all of them, but a lot of accountants, and they tell you this, my job is to be the historian, to look back and make sure that everything is recorded and documented accurately so that you're out of hot water. Very few accountants do both. They are the proactive planner and the historian. And, in our world, we think it's kind of better to have 2 people in those roles, sometimes even 3. And the reason why is more minds are powerful than one. And then in addition to that, sometimes you need a surgeon to come in. We've had a forensic accountant come in certain cases. We had a $6 million tax bill for a client staring us in the face last year and lowered that down to under $2.5 million through a forensic surgeon, so to speak. There's things you need to be wary or aware about that, and the biggest thing about all of that is you don't know what you don't know. So making sure you've got someone that can ringlead, that's really important. Number 2, time is not on your side here. A lot of people say, well, 2026, kick the can. They've been saying that since 2016, by the way. 2026 is right around the corner. And we already talked about the fact that the IRS automatically can go back 3 years for any audit. Well, guess what this year is? But then you forget not only on the state taxes, but almost the entire tax reform of 2016 is scheduled to sunset. And that means that we're facing the possibility of higher tax rates, the disappearance of that nice little Section 199A deduction for business owners where there's 20% that you get to deduct off of your income in a lot of cases. I would say this to people. Now is the time to do some serious hedge planning. Every year that you're waiting, you're losing opportunity. You don't have time, if you're doing this at the last hour, to try to get your chips in order. And no, we don't know what's coming down the pike. So you need to make sure that you're working with someone that realizes that and is setting everything that you do with major flexibility. But if you wait, you're going to wake up to a nasty surprise in 2026 if this tax reform sunsets and nothing is done in the meantime. So there's that. Then the number one thing you need to know is taxes. And this is really important because we've been talking about taxes. Taxes aren't the objective, okay? What does it mean for you to live life on purpose? And I'm going to bet that the answer is not going to be taxes. They're not going to be in there anywhere in that answer, right? It's about your faith, your family, your business, your passions in life, right? Taxes are a pain. And they get our attention because nobody likes to pay them, especially pay too much of them, but they aren't your life's objective. And we have seen way too often that many tax plans over the years actually hurt the family in the long run. And the reason is because no one sat there and began with the end in mind. They solved what seemed to be hurting like a little chest pain today when a major heart attack was looming and no one was addressing the root of the issue. And that's so important that you have someone. We are a life planning firm for just that reason. We work as, in a sense, a person's personal CFO, that we take time to know someone's current situation, their future and goals, their family dynamics, their stance about a multitude of things. Those are all very important. We want to be versed in a lot of areas, but we don't really want to be the expert in none. We want to be able to see things from that holistic, proactive standpoint. And, not just for things to make sense today, but for things to make sense for years and years to come for a person, their spouse, and their family. So why is that so important? Why is that even on the list? Is because I think everybody gets caught up in the hoopla of what's actually going on. And yes, this is an important issue. But if you have the right team in place, you can stay focused on what means the most to you, what is most important in life to you, and just simply live life on purpose rather than having to stress about 87,000 new IRS agents. So I encourage you, jump on our website, www.kennedy-financial.com, and find out how we've been helping people live life on purpose since 1989. This is truly a love labor. We get to help people every day, and we just absolutely love getting to do that. And yes, I am a little nerdy. I do like reading the tax code, but I think that just aids to what we do, right? But the real meat of the issue is there's nothing better than when people are able to retire successfully, stay successfully retired, pass family businesses on for 2-3 generations successfully, have good Christmases and Thanksgivings. Those are the things that matter most to us. So with that, my name is Angela Robinson with Kennedy Financial Services and Smart Money Group. I wish everyone a happy new year. God bless you, and cross those T's and dot those I's with this $80 billion of funding coming in the IRS.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Don't forget to learn how our sister company can assist you with all of your tax, bookkeeping, and consulting needs. You can find out more at briscoeandassociates.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.